So now we are talking about bearish candlestick, and I've already explained bullish candlestick to you guys. Okay, so now we are on bearish candlestick pattern, and from the word bearish, you see that's why I gave example earlier with the bear. You see, bears. Let me say this is a bear, and this the bear goes down to, let me say, inside eyes or snow, anything. You know what I'm trying to say? That's why they're using this particular animal to set example, and that's where the name is derived from. You know what I'm trying to say? So when I'm talking about anything bearish, price is going down. You know what I'm saying? That particular asset, anything it is good. But we are talking about bearish, we are talking about sellers. You know what I'm trying to say? So now the first, what's it called, we have here is hanging man, the first candlestick pattern. Hanging man. From what's it called? From the word hanging, a man hanging. From the word hanging. Let me draw something. I like giving examples. Let's see. This is a man here. Now, you see, when the man hang himself, let me see. This is let me see, this is a fan. Let me do the example. Let me use a fresh place. Let me say this is a man's head. You know, when the man hang himself, let me say this is a ceiling here, like this. So just hang himself, and if it hang himself, this is his leg, like this. You see, that's why I said if you want to memorize this, just use simple analysis. See, this is ceiling, and if a man hangs himself, you see, this is the head, and this is the body. That's what I'm trying to say. So you see how, what's it called? The candlestick will look like, it will look like a man hanging on the air. That's what I'm trying to say. So now let's continue. They say number one we have hanging man. Okay, let's read through it now. They say the hanging man is the same pattern as the hammer, only reverse. Do you understand? You see this particular candlestick here. This is it here. This particular candlestick look exactly like the what's it called, hammer. The hammer I just explained. You see, there's a short body at the top with a wick at the bottom, and that's exactly how what's it called is. But this particular one, the differences is, if you can note, let me scroll back to our hammer. You see this particular one, note this first. You see, we have a red body with a long wick below. You understand what I'm trying to say? So now let's go back to our hammer. Let's go back to our hammer. You see, this is our hammer. You see the difference? The number one difference is here the hammer have a green body. Have a green body. You see, that's the part, there's some differences they are having. And number two differences is this is coming from an uptrend. You see, the what's it called? Our particular trade is going on to an, let me see, from downtrend to an uptrend before it is formed. One thing I did not explain from the beginning is anything, let me see, before you confirm what was it called, a particular candlestick, if you're talking about bearish, it must come from, let me see, an uptrend. You know that particular one I just explained earlier is from downtrend, which is bullish candlestick. You have to see, let me see, the chart must be, let me see, the particular asset, the price must be going down first before you sight that candlestick, before you know that this is bullish. But if you are talking about bearish, there must be an uptrend first before you sight it. You must sight it at the top. That's what I'm trying to say. It must be going from up, from down to up, then you sight it at the top. That is when you know that, yeah, this is what we're talking about, bearish. That's what I'm trying to say. So now, firstly, you see, this is going from an uptrend. Then the candlestick pattern is not formed from this place. You know what I'm trying to say. So now let's read. They say the hanging man is the same pattern as the hammer, only inverse. Thus, it is formed by a green or red candle with a short body and a long lower shadow. I've already you can understand that now with the explanation I make on the bullish one, which is the hammer. They say it show up at the end of an uptrend. You see, at the end of an uptrend, always note that, because if you don't normally note that, if you don't normally note that, you might just come and see this now and say this is hammer. Why no? This is the, what's it called? You have to check first. Is it an uptrend before showing it, or is it a downtrend? You have to notify, like you have to check. That's why if you're analyzing, you have to calm down. And advisable if you have a laptop or tablet so that you can see it clearly. No, not you can see it clearly. Okay. If I don't say if you have a phone, you can analyze. No, if you have a phone with, let me see, a wider screen, you can decide to rotate your phone and analyze it. Even if your phone is not that big, you can zoom it. I think they normally zoom trading view. Like they normally zoom it. So you can zoom it and check some things, okay? So now let's continue. It show up at the end of an uptrend, which I've already explained. It suggests a considerable sell-off during a given period, but bull could not temporarily push. You see, bull, which are the buyers, and all the buyers always push the market up. You see, what I'm trying to say is when the buyers started from this place, the buyers, okay, they started from this place. going. So when they reach this particular place, they couldn't go again. They will now hand the market over to the sellers. They don't want to go again. That's what I'm trying to say. Maybe they give up, or the what's it called? The sellers are now stronger than the buyers, which that means the buyers are now stronger than the seller. They will now hand over the market to them. That's what they are trying to do. They say it suggests a continuous sell off during a given period, but the bull could not temporarily push the price higher. You see, they cannot push it higher, after which they lose control. They lose control and now give it to the bearish. You understand what I'm trying to say? So they say little or no week, like I explained earlier. This you can see it exactly. You can see exactly like this in trading view, or you can see similar, but you see a small week, small. If you see a long week, that's not what is it called, a hanging man or hammer. No, you might see a small or no week. Sometimes you might not see it. Or if you want to see it, you see small. That's what I'm trying to say. And if you see it, it is giving a potential that the market is going down, the direction to be going down. Then you now short. That's what I'm trying to see. As simple as that. So now we have shooting star. You see, the shooting star is the opposite of an inverted hammer. You know the inverted hammer? Let me draw it without going back. The inverted hammer is like this, right? But the shooting star is the what's it called? Is opposite of an inverted hammer. Opposite of this, the inverted. Let me see. The upside down of this will be giving something like this now, like this with the wake up. That's the upside down of this. You understand what I'm trying to say? That's what they're trying to say. See, it is the shooting star is the opposite of an inverted hammer. It consists of a red candle with a short body and a long upper shadow. This shadow is normally weak. You know what I'm trying to say? Long upper shadow. Shadow, you can call it shadow or weak, anyone. You know what I'm trying to say? Generally, let me show you how it is. You see, this is what I'm trying to explain here. This is it here. You see, it is inverted. The inverse, let me say the inverse of hammer. You know what I'm trying to say? The upside down of hammer. You know what I'm trying to say? They're not saying generally the market will gap a bit higher on the candlestick opening and will surge to local peak before closing just below the open. I will explain that now. The body can sometimes be almost non-existing. So let me explain something here. You know, normally, what did I say on the what's it called? On the candlestick. What did I say on candlestick? Let me explain what I'm trying to explain here. The generally the market will gap a bit higher on the candlestick. You know, before this particular, let me use arrow. Before this particular, what's it called, body comes to this place, the price goes up. Before a week is formed. Let me tell you something. Before a week is formed, just go through your chart. What I'm trying to say now, just go through your chart. You know what I'm trying to see. Let's say a particular. Let me draw. What's it called now? Let me draw something like this. Let's say this is the body. Then let me say, before, let me say this is what's it called, a candlestick here. What I'm trying to explain here, this is the candlestick, okay? So now, let's say a particular price of coin start going up. Let me say if we decide to stay on this particular place and my arrow is the body. After, let me see if another candlestick decided to open, the body will still remain like this. You understand what I'm saying? So let's say before the another candlestick open, after the price start going up like this, then the price start coming down. Where the space here, you know what it is going to form. It goes up first before coming down. Then the space here, that's where they will form weak. You understand what I'm trying to say? Any place you see weak, the price actually goes to that place before coming down. I don't know if you understand what I'm trying to say. I don't know if you understand what I'm trying to say. So that's what they're trying to explain in this particular scenario. They say the price must reach a peak. This place here, it must like it. You see the let me say the vibe the trade is giving in this particular place first. It is giving a vibe like the trade is going up. Then after going up, then it now give a decline and start coming down. You understand what I'm trying to say? Then I say that the what's it called body will what's it called close just before the opening. I don't know if you understand what I'm trying to say. So let me not confuse you guys. If I'm trying to go far, let me just confuse you guys. But this is important. This is important because this candlestick pattern can be so complicated, and you might get yourself confused if you don't know this. You know what I'm trying. That's what I'm trying to explain. Deeper parts. You all understand what I'm trying to say. So now they said the body can sometimes be almost non-existent. Sometimes this body you must see it's so small, but there must be a long week at the upper. But sometimes this body you see it's so small. You know sometimes you see the body so small. You see little or no lower week. Like I said earlier. You see this one too. You might decide not to see exactly what I'm saying here. You might see a little, or you see this one self it have little. You see little or no week at the bottom. You understand? And it must have a low, what was it called, long upper wick. You understand what I'm trying to say? And the confirmation is, like I said earlier, it must be coming from an uptrend before this is formed and before you know that this is a shooting star and the others. You know what I'm trying to say? So now let's move to bearish engulfing. You see, from the bullish engulfing. I think if I don't explain this, you guys already understand. But let me explain. They say the bearish engulfing is the inverse version of what? Bullish engulfing. Don't, this word are so simple. Don't, because if I just come out now, let me say you are new to trade and calling something like engulfing, bullish, and pardon, and you say, oh, this guy should go to this thing, hard, why? No, it's very, very simple. The words are very, very simple. With time, you get familiar to it, okay? With time, you just get familiar to it. If you are using something 1, 2, 3 days, 4 days, 1 week, you just get familiar to it. If somebody call it, you don't need to, let me say, check your chart before, or check a picture of it or a PDF of it before you know. So sorry for the interruption. So let's continue. They said the bearish engulfing is the inverse version of bullish engulfing, which I've already explained. The first candle has to be small grain body. You see, for the first one we have, the first candle is only for the bullish engulfing. The first candle is a red one, small red one. But in this case, we have small, what's it called, green one. Then I say, you see, the first candle has a small green body and is completely covered by the next long red one. You see, that one was the bullish one was covered with the green. The green covered the red, but in this case, red is covering the green. You understand what I'm trying to say? Let's say this pattern come at a peak of an uptrend, you see, and suggest a reversal. Reversal, you see, it was going up normally, then it started reversing. You understand what I'm trying to say? They say the lower the second candle continue, the more momentum the bearish move will have. You understand what I'm trying to say? So now what they said first, they say there must be short, long one, which is the short, what's it called? Green one, which was this, engulfed by what? A long, what's it called? Red, which is this. As simple as that. You understand what I'm trying to say? So I think this is well explained, and with the explanation I make on the bullish engulfing, you guys understand this now. So now let's move to evening star. Let's move to what? Evening star. Evening star, you see, like I said earlier for the, what's it called, morning star. You see, this is another one called evening star. We have morning and evening. We only find morning star at what was it called? We only find morning star in bullish and evening in what? In bearish. So they say again, the evening star is the inverse version of bullish morning star. You see, that's what I'm trying to say, and it represents a three stick. You see, even that one, it, what's it called, consists of three stick candlestick. That's what I'm trying to say. They say it consists of a short body candle that come between a long green and a what? A large red. You see, this is the one they are talking about, a short candle at the middle. That's what I'm trying to say. And it must there must be a green here. You see, in that particular bullish one, here is red in that bullish place, which is morning star. That's what I'm trying to say. And you see, in this, what was it called? In this bearish evening star, here is red, which in that one, if you go and check it, there is green. You understand what I'm trying to say? So it's like, when I explained that one, I gave reference and I gave how I was able to memorize it. So let me show you the inverse of how I was able to memorize this. You know what I'm trying to say? You see, this is just like morning in the morning. You know what I'm trying to say? Then this is star falling down in the evening. You see, evening is just like sun falling down now. You know what I'm trying to say? This is morning, green. Then falling, this is a star. Then the sun is falling. It's just like sun come from this place here, then fall in the evening. This is evening. You know, that's how I normally memorize. You see, if you check that one, here is this particular side. If you check the morning one, this particular side, which is the right hand side, was red. Red is the green. Then it now comes. You know what I'm trying to say? Then fall. Sorry, like this. The sun was falling in the afternoon. You know what I'm trying to say? Then there is a star in this place. Then now goes up, which is here is a green. That's morning. You guys can use your own pattern. You know, sometimes everybody have his own way. So this is evening star. We now have three black rows. Three black rows, which is the opposite of what? Three white soldiers. It's the opposite of the three white soldiers from the word three black rows. It's the opposite of three white soldiers, okay? And the three white soldiers I've already explained. They say the three black rows are like the bullish three white soldiers, but only inverse. They are inverse of them. It comprises of three long straight red. You know that one comprises of three long straight green. That one is green, straight green. If you hear straight, there's nothing in between them. There's not another color in between them. If there's green number one, number two will be green, number two, three will be green. If it is red, Number one will be red, number two will be red, number three will be red, and all of them will be long. It's not something short. No, all of them will be long. After this one closes, another one will open out. It will start going up again with that same color. It will start going up. Another one will open again, go up with that same color. That's what I'm trying to say. So they said it comprises of three long straight red with short or almost non-existent shadow. What do you mean with short or non-existent? What is it called? Weak. In this thing, what is it called here? In this candlestick here, this is number one, this number two, this number three, there will be short. You can't just see. That's why I say these are some of the confirmations. You can't just see some candlestick which is green, 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 and check. This is what is it called? Three white soldiers because there is green number one and it's long green number two. No, if you see that there is less, this number one is green and does not have weak or have small weak, and number two is also green, have small or long, small or no weak. Number three is also green and it is long, have small or you can see kai. This is three white soldiers. Yeah, this is three white soldiers. Then before you confirm again that yeah, this is three white soldiers, check is it coming from a downtrend or a uptrend. You will not check if it is coming from a downtrend. Yeah, kai, this is three white soldiers. You know, sometimes too. Likewise goes to three black crows. You now see if you see these three black rows, red, 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 you now see kai. Let me check. Is there weak or is there no weak? Is there anything in between? If there's nothing in between, that's okay to good. Let me check the trend. Is it coming from an uptrend or a downtrend? If it's coming from an uptrend, then you don't see it. I see kai. Definitely, this is three black rows and I'm supposed to short. That means the market will be the direction of the market will start going down as seen here. That's what I'm trying to see. So as simple as that. So how we are done with what's it called? With bearish candlestick. I think we are over okay. We're having something like 10 minutes left. Let me see if I can explain this. Okay, I can explain this in 10 minutes. You see, the next one we have, next what's it called candlestick we have bilateral candlestick pattern. Bilateral candlestick pattern. They say this candlestick pattern can move in either direction. You know what I'm trying to see? Bilateral can if you cite it, let me just give what they are trying to say. Okay, let me just give what they're trying to say. If you cite this particular candlestick, the market might move up. They don't say the market will move up only. The market might move up or might move down. So advisable if you see this kind of candlestick, don't enter that particular trade. Wait for good candlestick like bearish one or what's it called? Bullish one. If you see this particular candlestick, just hold on, don't enter because if you enter, the market might go you the wrong way because if you see that particular candlestick, the market might go up or down. Anyone. That's what this bilateral candlestick means. You understand what I'm trying to say? And number one, we have doji. That's what I was trying to explain there. They are called doji's candlestick. You understand what I'm trying to say? They are there. In the bearish one, we have like evening star and others. So this one we have number one, we have doji. They say the doji candlestick has an exceptional small body and long shadow. You understand what I'm trying to say? Exceptional. All of them, all these ones you are seeing, bilateral candles, all of them have small body. You always see them with small body. I know you guys know what is body by now. Now these are what you call body. This parts they are called body. They are bodies. I've already explained that. So you always see them with small body and a week with long or short week or equal week. Let me say long or equal week. Long or equal. There's nothing like one will be taller than the other. No, long or equal. Let me explain that. Some of you are confused. Okay, let me explain that. They say the Doji candlestick has an exceptional small body and long wick. This is what they are talking about. Exceptional small body, which is this, and a long wick. Okay, and that's it. While it is generally perceived as a trend continuation pattern, traders should be careful. Hey, you see what I'm trying to say? Careful because it might also end up with a reversal. That's what I'm trying to say. To avoid confusion, you should open a position a few candle after dodge when the situation become clearer. You see, that's what I'm trying to say. If you see this kind of candlestick, just hold on and wait for the trade to be clearer and wait for, let me see, good candlesticks that you can notify. Yeah, this is actually bullish or bearish before you enter. That's what I'm trying to say. So if you see this kind of candlestick, they're very, very risky candlestick. Just stay away. If you just see them going enter a particular trade, just count down first before you enter. That's what I'm trying to say. So you see this what I'm trying to say. Equal. This is what equal means. Equal. You see, there is a short body. Then the wick must be equal. You see this size and this size are equal. You understand what I'm trying to say? So that's it. Because you can't just see, let me see, candlestick like this. Let me draw it. One long and one short here. And say, uh, maybe this is what's it called? Doji, no. They must be equal or one will be long, the short body at the top with no small or no weak. That's what I'm trying to say. That's what they say. You see, potential direction. You see, the arrow they are showing it might go up or what? Come down. So that's it for bilateral candlestick. So thank you.